Hello again, and as always, thanks for checking us out here on the fastest 4 minutes in finance. This week, what retailers are telling us about the economy and how that could affect the market as we move into a new year. Well, the stock market has been on quite a rally over the past few weeks. The S&P 500 index is up more than 10% since mid-October. Late last week, stocks surged after inflation data came in a bit cooler than expected. Investors want to see inflation cool, primarily because they hope that will signal that the Federal Reserve will call off or at least slow the pace of the long string of consecutive interest rate hikes it is on. The rate hikes, of course, are meant to cool the economy, but not bring it to a screeching halt. Inflation is, of course, a problem for the economy because consumers are spending more on needed goods and services, which gives them less to spend on desired goods and services. And since consumer spending accounts for more than 2/3 of the U.S. economy, a drop-off in it could signal a downturn. So that's where the retailers come in. If the big retailers are still doing well, the economy is more likely to be holding up and withstanding high inflation. If the retailers are reporting a slump, then it might signal the predicted recession is materializing. And just like the rest of the economic story in 2022, it's been a mixed bag. On Tuesday of this past week, Walmart and Home Depot were the top retailers to announce stronger than expected third quarter numbers. In Walmart's case, the U.S. same-store sales were up 8.2%. That beat consensus estimates of 3.5%. Walmart stock shot up 7% after that news, and the overall markets were up significantly. But buried below the headline was CEO Doug McMillon's quote that Walmart was gaining market share in grocery. Grocery prices were up 12.4% year over year in the October numbers. And CFO John David Rainey told CNBC that Walmart shoppers are buying less expensive proteins like hot dogs and peanut butter instead of pricier meats, and that they are waiting for sales events to buy items like TVs and air fryers and are spending less on clothing and home accessories. Wednesday, Target released disappointing third quarter numbers. Profits fell by about 50%. Earnings per share was $1.54 when $2.13 was expected. The company also warned of slower upcoming holiday sales. Target stock dropped 15% on that news, and the overall market did drop as well. So the bottom line here is it's still unclear what the end game will be with inflation and rate hikes. And as we say often, it is never as good or as bad as it seems. Investors, as we just proved, will continue to react and overreact to positive economic data and news, and they will continue to react and overreact to negative economic data and news. You cannot afford to make your investment decisions in that way. We should expect more market volatility in 2023. Staying invested for the long term is still the best way to reach your long-term financial goals, and creating a plan helps you stick to it when market volatility tempts you to give up. Thanks for listening.